Good afternoon and welcome to the MANOLETE Partners PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and will publish those responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Stephen Cooklin, CEO. Good afternoon, sir.
Good afternoon. Thank you very much indeed. Good afternoon to everybody. So talking is Stephen Cooklin, the Chief Executive of MANOLETE, Chartered Accountant, joined by our CFO, Mark. Mark, do you want to introduce yourself?
Hi everyone. I'm a Chartered Accountant. I've been with MANOLETE for 4 years and my history is mostly with Deloitte in the city.
Lovely. Thank you, Mark. Moving through the slides, so hopefully people have had a look at the RNS that we released earlier today. From previous feedback, half the people would like a reminder of what we do. The other half say that's a complete waste of time because we know what you're doing. So we thought in the interest of levelling up, we would go for the safer option. So very briefly, MANOLETE has been around since 2008 in the UK market. We focus exclusively on UK insolvency litigation, which means we're able to buy the claims that we take control of, and that gives us full control of those claims. They are our assets. So the other litigation funders, both public and private, are just pure funders of litigation, and the benefits of control to us of buying it obviously is we can approach the other side, they can approach us, we can settle, and the whole duration of the case tends to be an awful lot quicker. Plus other things like fixing solicitors' fees, because they are acting for us rather than a third party, are all beneficial in our world. Very broadly, and it is very broad, there's lots of variations around the edges on this, but in broad terms, we pay around £5,000 to £10,000 up front to buy a claim of it might be a claim for a few £100,000. We then pay the legal fees. Then when we get a recovery from the other side, we get all that money back, including the upfront, and we split the remainder 50-50. On really large cases into millions of pounds, there'll be a ratchet in favour of the creditors. So our share will go down after the first million or 2 million to 40% and 6% in their favour, and we probably paid a bit more up as well, but no more than 5 figures usually. The type of claims we are doing are a lot of them against directors who are usually the owner managers of their businesses. An awful lot of them run their lifestyles through their companies. And that's fine as long as at the end of the year the business is profitable and they can declare a dividend to repay the loan that they've taken from the company for their holiday, for their kitchen improvement, for their Arsenal season tickets. That's all fine. Where the problems come in is if the company can't pay a dividend, it hasn't got the reserves, or it's becoming insolvent, or has in fact become insolvent. That is a debt due to the company from the director personally. So that's a biggest segment of claims. Another very big segment is called transactions that undervalue. You've got a company, something's gone wrong strategically, or with a customer, or with a supplier, maybe with employees, and some large creditors have built up within that company. The owner manager will set up a new co, a clean company, and transfer the business of the old co for a very low value to the new co, and leave all the debts in the old co. Obviously, that's not right. They need to pay a fair value and a proper value for that business by the new co. So that's a typical class of claim. And the third one worth mentioning is preferential claims. A lot of these businesses we deal with have often got family money invested, loaned, etc. And the rules are that you've got to treat all creditors equally. You can't put your family or friends above HMRC, for example, or the window cleaner. So those who pay preferentially, family members, those family members have to give that money back, or the director has to go into his own pocket to make things whole. So over the last 14 years, we've invested in over 1,000 UK insolvency claims, generating well in excess of £116 million. The returns on those cases have been very high indeed, and very consistently high, with internal rates of return of over 130%. Maybe compare that to the venture capital private equity world, where a good return is around 20%, and then return on investments are around 120% as well. So really the highest that I've certainly seen in my financial career. The structure is very equitable. We don't take a percentage of the top line gross recovery. We only take a percentage of the net. So that incentivizes Manolete and my team to operate these cases very efficiently. So what's good for the creditors, HMRC, is good for our shareholders. And that is a major point for us, is the main creditor in liquidations typically is HMRC, and that is you and me. That's schools, hospitals, defence budgets, what have you. And so there's an awful lot of good from the governance and the structure of what we do into society. As I said, insolvency is the only area in the law where you can buy claims. Otherwise, you've got to just fund and be distanced from that claim. Pre-COVID, there were around 17,000 UK companies going bust every year. But then in COVID, the period in lockdown, the government changed the insolvency laws temporarily to make it very difficult to make a company become insolvent to protect employment in the UK while the pandemic was ravaging around the globe. So the number of insolvencies dropped very sharply to around 11,000 a year. And obviously our KPIs, our key performance indicators, decreased as well. But the good thing is, in April 2022, which happens to be the start of this most recent financial year, those laws return back to normal. Every year, what comes out of those insolvency claims, around 2,000 claims which recover eventually in one way, shape or form, £750 million. So that's really our addressable market on an annual basis. The way liquidators used to run these claims, and still the majority of time, because of the old habits, run these claims using lawyers on a no-win, no-fee arrangements. So if no recovery was made, the solicitors didn't get paid anything, but if a recovery was made, they could charge double. And so on the good cases, obviously there was no real incentive to get those done particularly quickly when you're getting paid double and you know it's a good case and you know the person's got money to pay. So in 2016, the government wasn't happy with this across all of litigation, not just insolvency, and they put forward the Jackson reforms, which made it much more difficult and unattractive to do these no-win, no-fee arrangements, these kind of ambulance chasing things you would have seen in the Daily Mail, etc. And so all the legislation regulations are very much in support of our way of doing things. So that yellow slice of third-party funders, that used to be non-existent 10, 14 years ago, and that's been growing and growing and growing. It's now about 20%, and our mission is to turn the whole of that pie into third-party funding. And when you look at the yellow piece of that pie, the Professor Walton, who looked at this and did several reports online, said that Manolete had a 67% share, very much dominant leading company in the third-party funding segment. The next biggest was just 5% and then 4%, etc. And that's led to an awful lot of awards. We've won the Turnaround Restructuring and Insolvency Award on 5 occasions. Even more importantly, the register that a lot of lawyers and liquidators look at is Chambers Guide, which is very, very well respected. And they started running an insolvency litigation league table in 2021 and 22. The next one's due out in a few days' time. And the only single company in the UK that's in Band 1, the top Premier League, is Manolete Partners PLC. When you look at our returns over many years of running this business now, you'll see here that there are literally no cases outstanding all the way through to 2019 and just 12 left from 2020. So we have very, very consistent returns across hundreds and hundreds of cases. We're not dependent on 1 or 2 big cases. It's all spread over 689 separate completed cases 116 million recovered. Out of that, 52 million pounds has been paid to creditors. That's mainly to HMRC. That's paid for good few schools and such like. Lawyers have been de-risked, so rather than taking the risk of that no win, no fee, they've been paid by us as the work is done on fixed fees, as we always said. And the durations, because we're in control, that we own the case, are just over a year, which in the world of litigation, I think of divorces and litigation in the high courts, takes years and years and years. Lehman Brothers is still going through the courts to this very day. Our average is just a year. So very high level of completions, and then very large numbers in the last few years since IPO. Certainly when we've had good capital to utilise and a good team, the recoveries are over £20 million a year in many years, and only just down to 16 in 1 or 2 years, and that's far higher than in our pre-IPO years. So the business has grown so far, so fast, with very strong returns on a consistent basis. So just going back to the UK insolvency market, you can see here, this is from the Insolvency Service. The number of insolvencies was running pre-COVID at about 1,000 a month in the CVL sector, by far the biggest, and that dropped sharply down to around 500-600 when they passed that emergency legislation to make it very difficult to do insolvencies. Then as businessmen started to realise that time was going to be over soon, the number of insolvencies crept up and is now consistently far higher than the pre-COVID level, and it has been like that for a long time. In fact, just announced this week, 2 days ago, was 2,181. So that would be almost off the charts here, actually, with a number of companies that went bust in May that's just passed. And that was the highest level of corporate insolvencies in the UK since records began for monthly counting in 2019. And you just put in your mind the shape of that curve, high, a dip, and then a strong recovery. You then look at Manolete's inquiries, post-IPO, going up towards the pandemic, rising very fast, and then diving down as they changed the laws, and then recovering just like that curve to way higher than pre-pandemic. And then with a slight time delay, the number of signed cases, which is when they start getting put into our books, same shape, rose fantastically well post-IPO, dipped with COVID. When the laws changed back, has come back much, much stronger. And that's really translated into our financials. You can see the number of completed cases there, 193 for this last financial year. That has driven realised revenues, which exceeded, it was more than 100% of our revenues this year were from closed, completed cases. 129%. Mark will go into the reasons why we had an adjustment to one-off adjustments to the unrealised, but the realised revenues are ones that have no subjectivity or valuation element behind them at all. All those revenues were realised this year. Here you can see the number of signed cases by month. We track everything almost by the minute at Manolete. We're kind of data junkies, and as you can see here, things had gone down from the COVID period, and then from November just past, a very consistent strong rise on the number of signed cases. When you look at it quarterly, you can see it very clearly. These are the different financial years. Again, after IPO, building the business very nicely, then halfway through that financial year, the laws got changed, and then they got changed back, and look at this very, very strong recovery there. And that has translated into cash as well. Cash for this most recent financial year up 72%, so almost 27 million on a gross basis. On a net basis, so profit cash to Manolete, up 47% to 13 million. When you think our overheads in cash are only 5 million. To run the business, strong organic cash generation for the company. And we look at that in a bit more detail. Mark will go through a more extended cash flow soon, but you can see all this organic cash generation getting bigger and bigger, even through those COVID years. and that was 7.7 million generated this year before case investments, but case investments was only 6 odd million pounds, so we were able to repay 3 million of debt organically generated this year as well. It's just a bit more on cash. I'll flick through that. Current trading. So the first half of the year was really a hangover from COVID. It takes, as I say, about 6 months for liquidators to investigate a company before handing over cases to us. So the first half was very much like the old COVID period. The second half, they'd done the work, and so we had a record number of new case inquiries, record number of new case signings. In the second half of this year, we signed 180 cases, which was even higher than the whole 12 months of the prior year. Case completions also at a record level, and that all of these metrics continue just as strongly into this new financial year that we're into now, called FY24. So for the first 2 months, the signed cases were 154% higher than last year, and the cash continued to come flying in at 3.1 million pounds in the first 11 weeks of this year across 134 different cases. So very, very granular. The big challenge for us has been in the last 6-9 months is dealing with this tsunami of cases that we predicted to come through, but we were ahead of that game. So we hired 2 new financial analysts to help do the analysis of the defendants at the start of the case. We added 2 new expert insolvency lawyers from extremely good firms, and more are due to join in the coming weeks. As some of you would have read in the papers, we are doing a pilot with Barclays on the bounce back loans. So during COVID, the government put out £50 billion of bounce back loans, government guaranteed loans of about £50,000 per company to many, many small businesses. Unfortunately, around 1 to 5 billion of that was defrauded. These were the companies took the money, but then the directors put it into their back pockets and didn't pay it back to the bank. And where the bank has suffered a loss, they claim that off the government, and that's us. So Barclays approached us, which was a real feather in our cap. Barclays obviously is an enormous global operation. Manolete, relatively speaking, is a small business. So for Barclays to come to us was very flattering, but they've clearly seen what we do. And they had a pilot of 120 companies that hadn't paid anything on the bounce back loans and had clearly taken the money personally. 20 almost 20 of them settled immediately with Barclays when they knew they were going to be faced by Manolete. The other 100 went through a compulsory liquidation process into a private IPs firm. We bought 48 claims in the last financial year, and another 20 odd claims so far this year, and we've made hundreds and hundreds of thousands of pounds of recoveries already for Barclays. So therefore, they do not have to claim that money back off us as taxpayers. So it's a terribly important thing here. The other banks, all other banks that were involved in the bounce back loan program that Rishi Sunak, obviously as Chancellor, devised, and so he's very keen to see the right thing done. All of them have been watching the Barclays pilot, and Barclays have been absolutely amazed at the results that have come through. Before they came to Manolete, their recovery rate was less than 1% on these bounce back loans, and we beat that within the first few weeks of taking on just a few pilot cases, which was terrific. So we're very much hoping that the banks will do the right thing. It's all being coordinated through the British Business Bank, part of the government, and what we did was hire as a special advisor the government minister who was head of counter fraud, Lord Agnew, Theodore Agnew, and he resigned his post in the government, actually really quite famously, because he was so appalled by the level of fraud that had gone on exactly on this bounce back scheme. So that's why he's helping us on this. Finally, before I hand over to Mark, the cartel cases. So these are claims against truck manufacturing businesses that the EU Commission found were guilty of price fixing between 1997 and 2011. So 14 years, these manufacturing companies were colluding to elevate the price illegally to buyers of trucks, of certain types of trucks. So Royal Mail and BT, among many, many others, have launched claims against these manufacturers. They are liable to pay because you cannot. They've tried all the appeals with the European Commission and failed, so they are charged. But the question is, how much do they have to pay? So we bought 22 claims of bus companies, including quite big companies like Comet and CityLink and many others, who've got claims very similar to BT and Royal Mail. And we were waiting for the Competition and Appeals Tribunal, which is the arm of the judiciary that adjudicates on competition claims. It handed down the judgment on the Royal Mail and BT cases in January of this year. Though the results of that judgment were handed to external valuers of these cases, very uniquely, these are competition law claims. So MANOLETE, our lawyers, our directors, none of them value these cases. They're all valued externally, and we just take that number. And that fully supported our book value of 13.2 million, which includes cost, by the way, as well. And that was very interesting with two follow-on things from that judgment, very successful judgment, was number one, the next set of test cases, the Ryder Group, all settled, which was exactly our strategy on these unique cases from the very start, to tuck in behind the big claims, let them spend tens, maybe even hundreds of millions of pounds running those claims, and for MANOLETE to just move onto the battlefield once we could see exactly what had been adjudicated on those claims. So the other interesting thing, apart from the settlement, was then DAF tried to appeal the BT judgment on 5 grounds. The judge dismissed 4 of those grounds. He accepted only 1 on an obiter basis, not that it had much, if any, to do with the truck claims, but it did have possible application for the competition law more generally, and so he allowed that to go through, but he went on record saying it's unlikely to have much impact on his initial handing down on the Royal Mail cases. And then, very interestingly, and this really is the attractiveness of the defendants to settle these with the cost awards. Usually, costs awarded about 50–60% of costs. So the defendant had to pay Royal Mail 70% of its costs. That was £9 million just in legal fees of Royal Mail. They had to pay their own legal fees as well, so you can easily double that. And BT 75%, so another 5 million, and of course their own legal costs again. So huge numbers, and they're faced by a huge number of other claims, including our claims. So there's a huge attraction for them to settle now that the judges has said exactly what the overcharge numbers should be, is to avoid hundreds of millions of pounds of legal fees. I will now hand over to my colleague, Mark Taverner.
First slide that we're looking at is the overview of the trading performance for FY23. If you look at the table on the top right, and it's the pink shaded column. So in overview, we've recorded a EBIT loss of 3.1 million for the year, but this was all a result of events in the first half of the year where we had a one-off fair value write-down, and also a large case which went to trial and was unfortunately lost at trial. In the second half of the year, we've been trading profitably with an EBIT of 2.2 million, and I'll explain a little bit more about the first half, second half split later. We just go down the different categories of the profit and loss. Revenue of 20.7 in total is 2% higher than the previous year. However, that very much glosses over the fact that realised revenue, the real important part of revenue that actually drives cash, was up 76% at 26.8 million compared to 15.2 million the year before. And this was really driven by the number of case completions in FY23, 193 cases completed compared to 139 in FY22. And one case was completed for 4.9 million just itself, which is obviously a large case. Continuing down the profit and loss, unrealised revenue, which is the other component of revenue, recorded a negative 6 million because of those fair value write-downs that I mentioned earlier. So this is very unusual for us to have a negative number there rather than a positive number. But obviously that then had a knock-on impact of the gross margin as well. Overheads increased by 1.7 million or 34% to 6.8 million. And this is a result of a bad debt expense increase in the year. We do a very thorough review of debtors at the year end, and there were a very small number, we're talking about 8 debtors, where the defendants have either become bankrupt or had overseas assets. And we've just come to the conclusion that these are going to be too difficult to chase. So we've immediately provided for those. Other administration costs are broadly flat on the previous year. Salaries increased by what is now below inflation 6%. Marketing costs have increased as obviously the economy has opened up. Post-COVID, we're attending more business development events. Just to kind of explain a little more detail about the year of 2 halves, you'll see in the table in the top right-hand corner, you can see the difference in the gross profit in the first half of the year to the second. And it's really this performance in the second half of the year. So that's from the 1st of October 2022 to the 31st of March 2023, has really continued into our current financial year, FY24 as well. And you can see that's driven by the new cases signed in the KPIs table just below, 83 cases in the first half of the year, but now the general number of insolvencies in the economy as a whole is coming through and reaching us. There's 118 new cases signed in the second half of the year, whilst the number of completed cases has remained elevated and consistent in each half of the year. Also, I mentioned that we had an adverse judgment on a single case that impacted us mostly in the first half of the year. This just sets out the impact of that judgment, 2.8 million to the profit and loss as a whole. I just included in the bottom right-hand side an adjusted view of our EBIT if we hadn't had this very rare occurrence of a loss at trial. Very few of our cases go to trial. And as you can see, it's had a significant impact on this year's EBIT. So moving on to the balance sheet, our largest number is investment in cases, which is the carrying value of all our open cases, both long-term and short-term. This is at 36.5 million at the 31st of March. It comprises 351 live cases. That's the largest number of cases that we've ever had in our portfolio. The long-term split of that, the 13.4 million, all relates to the cartel cases that Stephen outlined earlier. Trade receivables of 24.4 million at the end of March 2023. We've got one large case completion that completed just over a year ago that's repaying over a 10-year time frame now 9 years to go, that's paying on time, and that's an unusual quirk in trade receivables. But most of our trade receivables pay within a 12-month period and on a scheduled set of repayment dates. Cash held was 0.6 million at the end of March, and we'd drawn down 10.4 million of our 25 million HSBC facility. Just to move on to the cash flow statement now. Stephen's already mentioned that we had record cash generation in the year to 31st of March. Again, if you look at the column on the right-hand side, shaded in pink, gross cash generated, that includes the insolvency practitioner's share as well as Manolete's share, 26.7 million. And as you make all the deductions for payments to insolvency practitioners, investment in new cases and ongoing cases, investment in overheads, we still have positive cash. Our cash has paid for our overheads and been sufficient to invest in new cases as well. We've also been able to make repayments of borrowings of circa 3 million in the year as well, which is nice in these high interest times. Just to touch very briefly on the aging of trade receivables, as I mentioned before, our trade receivables are repaid according to payment schedules, and therefore the vast majority of our trade debtors are not even due yet. So we have a very healthy aging profile of our trade debtors there. And the last slide just really sets out the history of our HSBC loan. We have a 35 million package in total. The core loan is for 25 million. We've got a further 10 million uncommitted accordion if required. Our current interest costs are a maximum of 3.7% above the sterling overnight index average, Sonia. And we've, at the beginning of this year, we took up the option to extend the duration of the loan to June 2025. So we're well positioned with sufficient funding for what we expect to be a expansionary couple of years. That's it from me. Thank you very much.
Excellent. Thank you.
Stephen, Mark, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the top right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we have received a number of questions throughout today's presentation. Could I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Superb. Yeah, I've been able to eyeball these as Mark was taking through those slides. Very good questions. Very happy to take on all of them. First one is, can you please explain how you bid for a case and what kind of commercial structure is agreed? For example, do you try to buy a claim worth 1 million for $500,000 and try to make a profit by settling the claim much higher level? So that's from Siddharth B. Thank you, Siddharth. Superb question. Almost never, Siddharth, are we bidding against other firms. I'd say it's less than 2% of the time are we told by the liquidator. I'm going out to a number of firms on this. This is very much, the insolvency profession is very much relationship based, and the reason why I paused on all those awards which are voted on by liquidators and the Chambers guides with us as the only company in band 1 that's voted on by lawyers, those are the people that refer cases in every single day. They're referring new cases into Manolete. Now, they may have gone to other funders. They, of course, totally free to do that. But many have worked with us on multiple occasions. And again, this is a very big differentiator between us and other listed funders. Is they probably, most other funders only work with that entity once or twice. With Manolete, we work with individual insolvency practitioners on many different cases. So we become the go-to, the trusted supporter for their claims. So looking at your 1 million or £1 million claim, that would typically, if we like the claim, if it got through the net worth test from the financial analyst, it got through the merits test, we would typically be buying that claim for around £15,000-20,000 up front. We'd then pay for all the legal costs. When we got a settlement, we would get that £20,000 back. We'd get back the legal fees that we'd paid, and then we'd split the remainder 50-50 between the liquidator and Manolete. And you've seen the returns. Usually we're getting 2 to 3 times the money that we've put in. We're getting that money back, which is a very high rate of return. I hope that answers your question. The second question, Kevin, very cheeky question. I like it though. Manolete was recently in court for 5 days, I believe, in a case against Michael Byfield. Kevin, he actually wrote a book about this. You might not know about that. Given that you try to avoid going to court, what can you tell us about the case? Well, because he wrote a book, I will tell you about the case. So we won the case. We won every single penny of the damages. We won every single penny of interest that we claimed for. And we're just agreeing our costs. And we've already received £100,000. The judgment was just last Friday. We've already received £100,000. So usually I wouldn't talk about cases, but he has been hoisted by his own petard by being so vocal about it. So there you go. Chris T, what are your thoughts on growing the business via strategic acquisitions? Oh, I'd love to get into this, but I probably shouldn't as a public company. I think it's really interesting. I think it's very, when you think of the environment that we're operating in, where you've got law firms working on cases, you've got barristers working on cases, liquidators, administrators. It is quite surprising that there hasn't been an agglomeration of lawyers and IPs and forensic experts. And then, of course, funders who are really relatively new to the party must surely come into that mix. So I think it's a fascinating area, Chris. I think it's a brilliant question. There's nothing on the in the hopper at all. I can look at the camera and say that very, very honestly. But I think looking to the future, I think it's really interesting. James E, and I hope that's not James Ewing, who I went to university with, because he's always interested in what we do. But anyway, James E asks, do you anticipate any cash flowing to Manolete from the cartel cases in the current financial year? Again, an excellent question, James. Thank you. So we've had these cartel cases on the book for years now. They are completely different to our main line of business. And as I've often said to shareholders, please only put a price earnings ratio of 1 on this, because we will not buy a group of cases like this ever again. So they are competition law, they're not insolvency law, which is why really external advisors run these cases for us and value these cases for us. So we're very much in their hands, and we're into an area of the law that my team, as brilliant as they are on insolvency, are not familiar with, hence the complete subcontracting of this. So we've always been very, very cautious with when we're going to land these. We're always very bullish on the prospects, because the EU have found them liable. They gave them the biggest penalty ever under the EU competition law courts of 2.9 billion euros, I believe it was. So they are bang to rights. As I said, one of them tried to appeal that, they failed. So it's just about how much. And that's why that BT Royal Mail case was so important in January, because it gave you the exact simple equation of how to work out how much is owing. So, and of course, hot on the heels of that, the next test case is Ryder, settled very quickly. So what does this all mean for Manolete? Well, we're clearly in a very good position with a judgment, hundreds and hundreds of pages in our hand now. So we're in a much more secure position than we were even 6 months ago, and certainly a year ago. So the thing now is to play our cards smartly. If we were to suddenly go running to the defendant group, I understand there's a group in Munich, saying, oh, well, you settled Ryder, look, these are numbers on BT, we want 13 point whatever million it is. That wouldn't be clever. Obviously, that's not how you pay your cards in a poker match. So our claims are stayed at the moment by the judge. He's stayed almost all cases apart from these test cases. So we will just move forward until they come to us wanting to have a discussion. There are excellent lawyer-to-lawyer avenues, as there always are in these cases, where that dialogue is pretty much ongoing. That's certainly how Ryder would have come about to settle, and that is how we intend to play it. So not be too keen, and we're not keen. If they're watching this, we've had these for 4 years. We've let £1.5 million. We're not going to rush to anything right now, and we know exactly what we're owed thanks to the BT judgment. Mark H asks, this might be one for you. At note 2.4, you seem to be saying that.
Do you want me to pick up the first part of this? Question, Stephen? I think the 1.2 uplift from the cartel case valuation, it's not the end valuation being increased. It's there were some future costs forecast within that valuation, and we've reduced the future costs because we no longer think it will go as long or go to trial. So it's a reduction of costs. It's a bit of a kind of fine point there, but
yes. Thank you. How long do you think the cartel cases are going to last for? Really, I've tried to address that. Answer: what percentage of cartel claims by estimated value relate to the acquisitions of claims from the sole person of significant control, John Morton, was 0. So what's behind this is CityLink, as everyone knows, was owned by John's private equity firm, Better Capital. And that's not how we came across the CityLink. I mean, CityLink is a very, very well-known company, of course. The liquidator of that business was EY up in Leeds. And when we were working actually with Deloitte to look at who were the big companies that have gone bust who might have big cartel claims, CityLink was on that list. And I went up to Leeds to meet one-on-one with the liquidator, and he was very surprised he even had a claim, is the truth of it. And we paid him for that claim. We did all the work. John Morton had absolutely nothing to do with it, because as a creditor, they have absolutely nothing to do with the decisions of a liquidator under law. So hopefully that answers your question. I hope there's no confusion in that whatsoever. James E comes with another one. Would you consider managing your Mark? This might be for you.
Might be another one for me. Yeah. So we have discussed with both the board and our auditors about whether fair valuing of cases is the correct accounting treatment. We've looked at valuing of cases of cost, and we have all concluded, and I would include HSBC as well in that fair value and mark to market is the correct way to account for the legal cases. If only to give investors and shareholders a true picture of the value of the balance sheet assets that we have. And we actually own these cases. We've bought them, and that they are an asset of ours. And we think holding them at a low initial cost wouldn't really reflect the true value to the shareholders of those cases. But we have been around that thought process. I think that's the answer.
Often, yeah.
Yeah.
James E challenges my response on the cartel cases and suggests that I should hurry to settle because of cost of capital. Look, I take the point about cost of capital. Of course, James, one wants money sooner, of course, to redeploy at 2.2, 2.8, whatever money market. It goes without saying. But when you're talking about a negotiation situation on a settlement, you have to play your cards very smartly. And when you're talking about £13 million, you've got to be careful that if you look too keen to settle too quickly, the other side will offer you maybe 50% of that if you're not careful. So we have to be resolute. We put a lot of money into here. We want to maximize the return to our shareholders. If that means a difference of 6 months or 12 months, I don't think the opportunity, or 18 months, whatever it is, that I don't think there's a real loss of opportunity. We've got plenty of other resources. As Mark rightly pointed out, we've reduced our net debt. We've got 15 odd million headroom in our RCF. So it's not like we're going to lose the other opportunities available to us. Now, that's a really, really important point. But we do want to absolutely maximize and squeeze the maximum outcome for the cartel cases for our shareholders. I think that's everything answered, Mr. Chairman.
Stephen, Mark, thank you. And I think you addressed all those questions you can from investors. And of course, the company will review all questions submitted today, and we will publish those responses on the Investor Meet Company platform. Before redirecting investors to provide you with their feedback, which I know is particularly important to yourself and the company, Stephen, could I please just ask you for a few closing comments?
Certainly. Thank you very much indeed. First of all, thank you to everyone for their time today. I would say that reflecting on these results, it's been tough to come through the last 2.5 years. It's been joyous to come through the last 6 months, where the business has rebounded so strongly, way above where we were pre-pandemic, with a much stronger team, a much broader team, and a huge influx of new high-quality cases. We thank all shareholders, all partners for their patience going through that journey with us. It was almost a wartime experience of the government effectively closing down the insolvency market. I hope in all of our lifetimes, for many reasons, not just business, that isn't repeated in our lifetimes. But I do strongly feel that the prospects of Manolete and the green lights on our runway now are all turned green. And having heard that interest rates have gone up now to 5%, and Bank of England's advisors saying a real recession is the only way to beat inflation, I think Manolete is onto a very benign and positive wicket for the very long-term foreseeable future. I would remind everyone that the Lehman Brothers insolvency back in 2008 is still going through the courts to this very day and paying lots of legal fees. But the point of me saying that is that the litigation associated with this whole huge number of insolvencies will go on for years and years and years to the benefit of the company and to our shareholders. Thank you very much indeed.
Steve and Mark, thank you for updating investors today. Can I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete and I'm sure will be greatly valued by the company. On behalf of the management team of MANOLETE Partners PLC, we'd like to thank you for attending today's presentation. Good afternoon to you all.